Good evening, everyone. We'll start this podcast in another minute. We are waiting for the participants to join. I think we are good to go. Good evening, everyone. Welcome to After Hours with William O'Neill India. This is Rajasekhar Kongari. I'm being joined by our head of research, Mr. Mahesh Joshi, as well. In this podcast, we'll discuss how the Nifty played out today and what are the stocks which moved the market. We'll also discuss about the key news which happened during the market and which moved the stocks. And I will end this session by giving a chart of the day. So let's look into Nifty's intraday chart. This is a 10-minute chart taken from Zerodha. I can see here Nifty opened on the higher zone. I'll try to annotate. For the first 40-50 minutes, it traded in a very narrow range, above 16,100 level. After that, there has been a clear fall in the market. Selling pressure has creeped into the markets majorly because of banking stocks, which have underperformed today. Also, a few IT stocks like TCS and HCL Tech have also underperformed majorly because of their not so convincing results. Apart from that, most of the other sectoral indices have performed well. During the day, you can see 50 DMA, which is at 16,049. Nifty breached that level and it closed pretty much below that level, that is below 16,000 level. So that is the reason we are not adding stocks to our model portfolio. We are waiting for a convincing follow through day and Nifty reclaiming their key moving averages. Until then, we will be staying sidelines because we don't want to lose capital in these turbulent times. We want to wait for the market to give a clear indication that new rally is about to happen. So these are the few leading stocks which have gained the most among Nifty 50 stocks. I can see here stocks like Divi's, JSW, Cipla have gained nearly 2%. On the downside, IndusInd Bank is in the news today because of few rumors and also regarding a FIR launched by Enforcement Directorate of Chennai zone. The bank has also given clarification regarding the same, but the stock fell nearly 3% on that reports. Also, other banking financial stocks like HDFC Bank have also closed more than 2% lower. And telecom related stocks like Bharati Airtel, Reliance have been falling because of Adani Group entering into the 5G spectrum. So that's it regarding the top gainers and losers among Nifty 50 stocks. Coming to the sectoral view, as mentioned previously, you can see here most of the sectors which have fallen are related to financial sectors, that is financial stocks. Apart from this, one is the IT sector, majorly by TCS and HCL Tech have closed lower. Apart from these, other sectors have closed higher. FMCG has closed nearly 1%. Pharma has closed 1.4% higher because of Divi Slab and Cipla, which have closed more than nearly 2%. And talking about Nifty on the longer time frame, I can see here, this is a daily chart for Nifty. This red line is 50 DMA. It has breached that level in the today's session and closed below that level. Volume wise also, today's volume was higher than the previous session. That is a sign of cautiousness. When the Nifty is falling, the volume should be on the lower side. That indicates there is not much selling pressure. However, if the fall is happening on higher volume, that indicates there is a high amount of selling pressure happening in the market. So you want the volume to be on the lower side when there is some fall in the price action. This Nifty is trading above its 21 DMA. However, this black line is a 200 DMA. It is clearly trading below that level, nearly around 6 to 7% below 200 DMA. We would want that level to be reclaimed by the Nifty index, and Nifty should stage a follow through day before adding stocks to a model portfolio. By this time, when the Nifty stages a follow through day and it reclaims its 200 DMA, we would want the leading stocks from the respective sectors to be also making new highs or reclaiming their key moving averages. Then our rally strength will be clearly higher. That gives a double confirmation to us. If the follow through day happens and the Nifty stays below its 200 DMA, then the rally strength will not be that much higher, that much not convincing to us. So we want the follow through day to happen and Nifty to reclaim its 200 DMA in the coming times. And a few stocks which are under news today are HTL Tech has reported numbers, but the street has taken it as in a negative way. The stock is down nearly 3% after this news announcement. Prior to this news announcement also, the stock has been falling. You can see here for the last 3 sessions also, stock has fallen and the volume was also on the higher side. It is trading below its 200 DMA clearly, and 21 DMA is also breached. So this is not so good sign for the company. We would want the stock to reclaim its key moving averages. On the results side, it has reported consolidated revenue was up around 17% year-on-year basis. However, the PAT grew, that is profit after tax grew just 2% year-on-year basis, but it declined more than nearly 9% on quarter-on-quarter basis. That is the reason stock has fallen. It has declared a dividend of 10 rupees per share. Also, the company has kept intact its both its revenue and EBIT margin guidance. Revenue is estimated to be growing at 12 to 14% in the current financial year, that is FY23. EBIT margin is expected to be around 18 to 20%. Yeah, that is the reason the stock has fallen today. And for the last couple of sessions also, TCS is also falling. After reporting its results, the stock has fallen nearly 8%. That is the reason IT sector has been under pressure for the last couple of sessions. One more stock which is under the news today is Care Ratings. It is intimated that the board of directors will consider the proposal to buy back its equity shares on July 20. The stock closed nearly 12% higher. Intraday it was up nearly 15%. One of the major reason why the company is looking for buyback is that they want to decrease the supply of the shares in the market because the stock has been under pressure. It is trading its key moving averages. If the company is able to buy back some of its shares, then the supply of shares will be on the lower side, then the demand will increase for the stock. So they are hoping for the stock to get some demand among the investors. And coming to chart of the day, we have taken Minda Corporation here. It has broken out in April, but due to some volatility in the market, it has moved downwards. It has reached its 200 EMA. However, it was reclaimed at that level within a week. That is a good sign. And all the other key moving averages were also reclaimed Currently, it is trading its ideal buy zone. However, we are not advising to our clients to buy or sell this stock. We are just trying to educate our participants here regarding how we look at charts and how do we decide whether to buy or sell. Some of the other parameters to look into the stock are number of funds have been growing consistently. That is a good sign. Institutional funds are taking fresh positions in the stock, and its ratings have been very good. EPS of 76 indicates good fundamental profile. It has reported good set of EPS and sales numbers for the last few quarters. Price strength is at 81. It is also considered good according to our ratings. Accumulation distribution rating, that is A by D rating, is at A, is also considered higher. So on the ratings wise, the stock is looking good on the technical front and both as fundamental front as well. On the charts wise also, it has trading in the ideal buy zone, but the volumes have been on the lower end. We would want the volumes to be on the above average side. Thanks for joining after hours. Hello.
Thanks, Rajasekhar. Can you guys hear me? Just wanted to give a couple of takes.
Yeah, Mailesh.
Yeah. So one thing is on the event risk tonight, right? What and how the CPI inflation data in the US comes through is going to be extremely critical in terms of how the US markets function and vis-a-vis the reactions to global markets tomorrow morning in terms of reactions to both data as well as the reaction of the US market. Now, a large consensus is around 8.8%, but I was reading a couple of reports where a few central bankers and a few research agencies in Europe are actually pegging the inflation might come around 9-odd%. So if that is the case, what the Fed dot plot had projected of a 75 bips, which is a consensus of what everybody believes on July 27th in its meet, that can actually be 100 bips kind of a hike. So it really depends. If that number is way above 8.8, comes close to 9, we can very well expect 100 bips kind of rate hike as well. And the dot plot will probably indicate that. And the first indicator will probably come through in terms of the spike in yields as well, specifically the 10-year bond in the US. The second element obviously is in terms of that context, what happens in terms of our own inflationary data. Now, what has come through yesterday at around 7-odd%, core inflation a tad bit lower as well. Obviously, you need to have a look at core inflation more predominantly in any context, whether it's Indian or any economy context as well. The large element here is again of the view that lower inflation, does that mean that the MPC or RBI refrains from doing a 50 bips hike? But on the other hand, there is the depreciation of the rupee. We're almost hitting 80 odd levels against the dollar. So that can probably make RBI hike faster to close the interest rate differential, right? So the differential that has got created because of the strong depreciation of the rupee, and even if inflationary numbers are around 7-odd%, core inflation is on the similar lines what we saw last month, and expectations of food inflation cooling off in the next few months. I think that probably might be a case, but I think the general consensus is that RBI will go ahead and keep on doing at least a couple of hikes and take the repo close to that 5.7 and 6% band. Because if the central bankers anyway are tightening across the globe and the rupee is depreciating. So watch out for these macro events, obviously event risks for the market as well. Neha had asked about the IT sector in general. See, two things here generally for the sector, right? One is in terms of downgrades that analysts will do is a little bit difficult at this point of time, because when you're talking about order flows, right, when client budgeting happens, it only happens in Q4 of our financial system, which means in the months of Jan to March. That is when a lot of companies in the US, Europe, or in the Western world will think about cutting budgets if there is a hard recession or even some sort of element in terms of hit on margins on respective sectors and companies within those sectors as well, whether it's BFSI, insurance, retail, manufacturing, whatever the case may be. So I think very difficult to predict how much of how much of these cuts will come through at this point of time. The second element is in terms of budgetary spends towards IT. I think a lot of folks have now understood that IT becomes an integral part in terms of not only carrying your business in a seamless manner, but you cannot have significant cuts done in terms of IT budgeting and spending, because those are the most cost effective measures that you can probably deploy over a periodicity of time over other processes. So even if these cuts happen in case of hard recession or a prolonged in-grade recession in the US or the West as well, uh, cuts might happen, order flows might slow down, but it might not taper down that significantly. Having said that, obviously, I think the price damage that has happened for the sector as a whole is probably expected to continue. It might consolidate, and it's going to be very stock specific. So, example, I think as we were speaking right now, I think Mindtree's numbers have come and they're far better than estimates. So, the large expectation for Mindtree was a 5% constant currency growth. They've actually delivered a 5.5% CC growth. EBIT margins were expected to come from 18.9, they were actually expected to contract to around 18, 18 and a half. In fact, they have expanded to 19 and a half, 19.2%. They've got almost $500 million in terms of cash and cash equivalent. So again, I think what the management commentary is specifically in view of these numbers, there are a couple of other IT mid-cap companies as well. Larsen and Toubro Infotech, Tata LXI has to be seen. Obviously, Tata LXI as we see from an O'Neill lens, right? It's a late stage base. It's a stage 4 base that we are probably looking at, which obviously means that it's extended. And obviously, late stage 4 also means that though we don't look at valuations, obviously, I think it's such a huge move. Valuations are through the roof for all these companies as well. So I think difficult to paint the entire sector. Yes, the sector is going through pain at this point of time in terms of price damage. But some companies, like in the case of Mindtree, has given an exceptional set of numbers. A few more might actually deliver numbers which are better than what the street is expecting. The other element is in terms of what happens, right, in terms of actionables. And obviously, I think what we've seen and what Rajasekhar was also mentioning, it's a watchful mode at this point of time. Our global team, as I've discussed, is very selectively adding stocks on our leaderboard when it comes to the Indian market, but it's very selective at this point of time. As we see in terms of our sector rotation graph, I'll just be tweeting that in the next half an hour as well. So I think all of you can probably see that on my tweet as well. Consumer cyclicals, consumer staples are probably looking good, and a few of the capital good names as well. So Siemens Tube Investments is something that the global research team is liking at this point of time, but they are become, like in our case, right? We're waiting for an FTD. We are very selective, and so is the global research team. So be watchful. Let's see how the event probably plays out onto the markets. Tomorrow's weekly expiry as well, and then let's hope that we get an FTD day soon, because most of these macro concerns, if they come in line with estimates, one presumption can probably come through that we are probably peaking off as far as inflation is concerned. Maybe in the next 2 months, 3 months, 4 months. Difficult to say, but then a couple of months stable data point on these macro fronts will actually give some respite for the market. So let's be watchful in terms of macro developments, corporate earnings, in terms of how data points are getting reflected and thrown by the markets, and let the markets help us and guide us, as we always say, in terms of our Cancel and O'Neill methodology to take our way forward in terms of deploying cash and protecting capital as well. So thanks guys for your time. We'll meet tomorrow again. Thanks, Rajasekhar.
Thanks, Mahesh.